Hello, I'm Alan Mullane, Glenigan's Economics Director, and welcome to this Glenigan Construction Market Briefing. Today I'm going to be assessing the findings from our latest Glenigan Construction Index, covering the 3 months to June, as well as assessing the prospects for the rest of this year and for 2014. The two sectors that have really been driving the growth we've seen over the last 3 months have been private housing and infrastructure. Private housing starts up around 12%, whereas the infrastructure side is up over 40%. There's a number of factors driving that growth across the two sectors. If we take private housing, for example, there's clear signs of a recovery in consumer confidence starting to flow through, and that's helped to lift activity in the wider housing market. If we look at house price inflation, that's started to pick up. We've seen some sort of positive rises there. Particularly London and the South East, but nevertheless an improving national picture. And that's been backed up by an increase in mortgage lending. The latest data released just last week showed a rise in mortgage lending, and that should help to feed through into the wider housing market, but also into new house sales. In addition, there's been a number of government initiatives which have helped to breed confidence back into the market and free up people to actually get back into home ownership. The Help to Buy scheme was the latest measure announced in the budget, and that's certainly helping people to buy new homes. As we get into next year, that scheme is extended to the wider housing market, so that should provide a further boost as we get into 2014. So I think prospects look strong there going forward as well. If we look at the infrastructure side of things, the last 3 months was very much driven by a number of important road schemes. The Bexhill-Hastings link road, for example, was a £100 million scheme which started in site in June. So that's helped to lift things, alongside obviously the continued flow of investment going into the rail industry. Our data, we've deliberately excluded from our data schemes over 100 million so we can see what's happening to the underlying trend, but obviously particularly in areas such as infrastructure, there's some big major projects going forward that are over that threshold, not least Crossrail. So those sort of schemes are also continuing to contribute to construction activity, and over and above the positive figure we're already seeing from the smaller schemes that are coming through. So good news there. Having said that, obviously we're only seeing a modest 2% rise in underlying project starts, which suggests that other sectors are faring less well, and it's certainly not been plain sailing at all for the industry over the last year. And if you look at the data, look at the sectors in more detail, you can see that there are some areas that have been faring less well. Private non-residential, for example, those sectors there, industrial, offices and retail, have been disappointing so far this year. There's been a clear dip coming through. We saw strong growth in all those areas last year. Industrial, for example, grew sharply during 2012, but dropped back this year quite dramatically. We think this recent weakness is going to be something of a lull, and we're expecting further growth to come forward as we get into the second half of this year and into 2014. Particularly given the brighter economic picture we can see coming forward now in the wider economy. We expect growth in the wider economy to gather momentum gradually during the second half of this year and into 2014, and that should help to boost investor confidence. Over the last year, a lot of the investor interest has come from overseas investors in the Middle East and the Far East, often looking for a safe haven for their cash. And picking on the prime real estate in the UK, whether that's offices or to a certain extent industrial premises, as a good safe haven where they can put their cash. Now that's helped to support investment in the sector and in the property markets there. But I think we're going to see perhaps a return of investment from the domestic market as well, and hopefully an increase in bank lending, which is well overdue as we get into 2014, all of which should help to underpin the recovery in investor activity and construction activity in those sectors. And certainly demand should be stronger as well as the economy recovers. The demand for industrial floor space, we've seen continuing demand there, particularly from distributors and from retailers, as we see the continued rise of the internet over 10% of all sales now, retail sales, are internet based, and that needs changes in the logistics space that's available really so that can be delivered. On the office side of things, again, we can see a recovery in private sector employment, which should, particularly on the service side of things, and that should help to increase the demand for office space as we get into 2014, and as a result help to underpin a rise in construction activity in that sector. The school side of things we expect to improve. Education we expect to come back this year and into 2014. But there has to be a caveat to that, I think. I mean, the key drivers that are lifting activity in that area are rising pupil numbers. A lot of local authorities are having to bring forward major investment programs to extend and improve the existing schools to make sure there are places for all the children that need them as we get into the next couple of years, really. And there have been a lot of concerns voiced that perhaps the government funding that's available to deliver those is going to be insufficient to build all the extra school places that are required. So that's going to be an important area to watch. In addition to that, though, the government has been pretty positive on its priority school building programme, which is the improvements to a lot of dilapidated schools. It's a £2.4 billion programme, and the government announced last week, following the spending review, that it intends to complete that by 2017. Now, if it's going to do that, it's going to have to crack on with the progress it's made to date. We have seen a bit of a slow start in the way the plans have been evolving, not least because they're looking to PF2 to fund it. That's the new private finance initiative. And they've really got to have to make sure that that is up and running as quickly as possible if they are going to make sure the money's there so that they can crack on and deliver all the improvements that they're planning to 260 plus schools by 2017. So looking ahead, we're looking at a broadly similar picture for this year and in the second half of this year and 2014. We are anticipating a recovery in the private and non-residential areas and continued strength on the private housing side of things, but that offset by weakness on the government-funded areas. Education withstanding, we see continued constraints there in social housing, where funding is being constrained sharply, and there was little relief, I think, in the latest spending review, suggesting that further cuts as we get into 2015-16 in that area. And in other areas such as health, where again there's going to be a lot of constraints on investment in the NHS estate. So broadly speaking, one of modest recovery, gradual recovery, but very much private sector-led recovery as we get into 2014. So overall, the prospects for the industry is one of modest recovery, very much led by the private sector over the next 18 months. That concludes this Glenigan Construction Market briefing, and our next briefing will be at the beginning of August. Please join us then. In the meantime, if you'd like any additional information, look to our website, glenigan.com, where you'll find further analysis, including on last week's spending round. I'm Alan Mullane, and thank you for joining us.